What are your thoughts on investing in AI and AI infrastructure? A bubble, or does it continue to perform? Man, this is a question I think about daily, and I speak to experts in the stock market, and I do a lot of prompting and a lot of thinking around this. It's really difficult because right now I'm positioned heavier in cash, and the reason I'm doing that is because I have to invest more into the business, and I trade, so I want more liquidity. But because of that, I'm more underexposed to the stock market than I'd like to be. So, even I've been thinking about how would I enter? Like if I make some excess liquidity and I wanted to reallocate back to stocks, like where would I genuinely be interested in entering? I'm still adding a bit now because I do think DCAing is just the best way to go in markets, but I am worried in terms of the valuations for sure, and I do feel like a crash is coming. Now, the problem is you can say this every year and eventually you'll be right, but by then, prices could double. So that's why you need a little bit of exposure, but I genuinely do feel like any new technology, will have this big peak, but then we'll hit a trough of disillusionment where, the reality of the CapEx expenditure will now start to set in. The reality of, how slow real progress actually is and regulation actually is will start to set in. The real fatigue of like the narrative versus how long this energy infrastructure takes to catch up will set in because there's a big lag on that. And at that point, you'll see valuations drop. Also be exacerbated or made worse by an event, for example, a macroeconomic event or a geopolitical event. And if the markets are really overvalued and there's some sort of shock, they can reprice really quickly to the downside. On the flip side, we could also have a scenario where things just keep going parabolic, money keeps being printed, and we just see this big run into 2027 and, you might feel sidelined. However, with valuations, how they look historically, I think it's very clear to say we are not early cycle. We are late stage cycle. And typically the approach for late stage cycle is, this might sound counterintuitive, but bear with me. You actually get into riskier investments, but you do so with much lesser stakes. So typically towards the end of a cycle, you're not allocating heavily to like blue chips. You're more so looking for the catch-up plays and the lower caps, but you're putting much less capital into them. So if the market does crash, it doesn't affect you as much. But if the market keeps going up, you benefit more because you're in higher risk beta investments. So for me right now, with the spare cash I have, I might weight down 10%, but into riskier investments than expose myself, with a higher percentage allocation to the NASDAQ, for example. So that's the approach I'm taking. Obviously, your approach will be, based on your financial goals, your financial situation, but I'm being a little bit more conservative now in terms of my capital outlay because I do think there'll be opportunities. There's nothing wrong with keeping cash sometimes, dealing with a bit of opportunity cost, and then only getting into a trade, an investment, even a business opportunity when the stars actually align for that opportunity. I think if you rush to invest and you don't really think, you can run yourself into trouble. But it's an interesting question because this is like the $1 trillion question in equities right now. Like, is this a bubble or will it keep going? I'd say it's a mix. I think we're late stage cycle, but I think we definitely could run until there's a top, and you want some exposure to that late stage run because they can be quite aggressive, and that's what we're seeing at the moment. So you kind of have to take your bias out of it.